come November 1, and no one will be permitted to import laptops, computers, and related items without a valid license meant for restricted imports. While the government cited curbing potential security risks to citizens, Chinese imports, and promoting local manufacturing as the reasons behind the licensing policy, IT industry representatives and others have flagged concerns that the government is returning to the license Raj regime that existed before 1991. Union Finance Minister Nirmala Sitharaman, meanwhile, maintains that the country is not going back to the old license Raj, and that the intention was to support manufacturing.
The FM was quite categorical, saying that this shouldn't be construed as that the government is going back to the license Raj regime. She said that these measures are essential to help the domestic producers to improve their capacity. But she also said very succinctly that this is for a limited period, this is not going to be permanent, and this is very specific and targeted, and hence nobody should consider that this is going to last forever.
Another common concern among citizens has been India's sticky retail inflation. While the headline inflation eased to 6.83% in August, from a 15-month high of 7.44% in July, the print continues to stay above the Reserve Bank of India's upper limit of the inflation tolerance band of 2 to 6%. While overall food inflation moderated in August, especially due to a steady drop in vegetable prices, experts are concerned due to scanty rainfall in August and a spike in global crude oil prices. So, what is the Finance Minister's take on this?
The FM was quick to add that the government has kept inflation under control for most of its tenure. However, he maintained that the government doesn't want to sit on the laurels, and it will do its best to help the poor to keep inflation by keeping the inflation under check. And she also said that inflation is a permanent challenge, and the government is taking measures one after the other.
After selling tomatoes and onions at subsidized rates earlier, the government has now announced a 200 rupee per cylinder cut in prices of domestic cooking gas to cushion the impact of high inflation. This resulted in an additional 200 rupee price drop in an LPG cylinder for Ujjwala scheme beneficiaries, who are already getting a subsidy of 200 rupees for a 14.2 kg cylinder for up to 12 refills per year. Despite the rising subsidy burden, Sitharaman remained confident about meeting the fiscal deficit target of 5.9% of GDP in FY24.
She said that even when the fertilizer prices were up, farmers were never burdened, and they are committed to not burden the farmers. And particularly on the LPG cut, she said that Prime Minister announced that particular cut on the occasion of Raksha Bandhan, and not just to target Ujjwala account holders, but also to new account holders, which is around 7.5 million women, which going to be benefited from the LPG cut. So on the fuel prices also, she said that the government has done before, but on this state-wise, she said that the states are not very keen to cut or reduce the fuel prices. In fact, there are states who have increased the prices rather than reducing it.
When asked about the row surrounding Adani Group, the Union Finance Minister said that such incidents strain spotlight on corporate governance and help it improve. Even the markets are better informed about compliance, she said. The minister suggested that it will do a lot of good to the country. Finance Minister Sitharaman sounded a positive note on overall economic growth of the country. But there are concerns too. Brent crude price has been hovering above $90 a barrel for a while now. So the average price of the Indian basket of crude is likely to overshoot the budgetary projection of $85 a barrel. It may hit the current account. The fiscal deficit, meanwhile, has widened to 25.3% of the overall FY24's target in the first quarter of the fiscal year. It stood at 21.2% of the budget estimate in the corresponding period of FY23. And with general elections around the corner, the government wants to fast-track most projects. it will also loosen the purse strings for welfare schemes, putting pressure on the exchequer. But there is hope too. Direct and advanced tax collections have jumped more than 20%. About the new license mandate, however, experts point out the key challenge for the government will be to strike a balance between the interests of global economic players and local businesses.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.
He's moving from employee to employer. Business Standard.